Hi everyone, let's go over my micro Elliott Wave scenarios on Bitcoin. Starting with the micro 1112 scenario where we're looking for a 121212 for then a wave 3 to the downside. Now most commonly after a 1112 you want to see a very extended high volume wave 3 to the downside, and if we look at this wave 3 over here, it is quite disappointing for a wave 3. It did hit the 1.618 trend-based fib extension taken from the high to the wide 1 to the wide 2. So for a wide wave 3 it's a valid wave 3, but just most commonly after a 1112 setup you really want to see a much bigger move to the downside, not obstructed by these long sideways ranges. It all has to be very short and very fast. What is also interesting is the 1112 setup itself. The second wave 2 over here in blue is longer in time than the first wave 2, and that is actually not really something you like to see, because each wave 2 coming after the previous one is a lower degree Elliott wave count, meaning the green count over here, the 1, 2 and then 3, 4, 5, inside the green count, the wave 3 specifically, you have the blue 1, 2, 3, 4, 5, and inside the blue wave 3 we then have the white 1, 2, 3, 4, 5. So each color goes to a lower degree, meaning that in a 1112 scenario you preferably have a shorter wave 1 in price and a shorter wave 2 in time, and you also want to see again a shorter wave 1 in price over here compared to the blue wave 1, and then a shorter wave 2 over here in time. That means that by far most commonly a 1112 scenario is a diagonal, a contracting diagonal structure where you then have a wave 1, 2, 1, 2, 1, 2, and then you get a big move to the downside. But as you can see over here as well, the trend lines are first of all expanding. This wave 2 is longer in time than the first wave 2 over here, and also this last wave 1 is longer in price than the first wave 1. If we look at the second scenario over here, the micro impulsive scenario, then this structure over here is counted as a 5-wave move in a 1, 2, 3, 4 and then a wave 5. So it is an expanding diagonal wave 1 structure, which is rare, but I have very much it's very difficult to count this structure any other way really, because of all the overlap in here. Now in this particular scenario we then have a wave 2 reaching the golden pocket, which is taken from the high to the low of wave 5, for then a wave 3 to the downside, which also again started with a diagonal. So you have a 1, 2, 3, 4, 5, ending wave 3, sideways wave 4, looking for a wave 5. Most common target for a wave 4 is between the 382 and the 05, and as you can see the 382 has been touched. And what's also common is that the higher degree wave 4 retraces to the lower degree wave 4. So inside this blue wave 3 we count 1, 2, 3, 4, 5. So this then becomes a wave 4, and most commonly a higher degree wave 4, meaning the blue one, retraces to the price action of the lower degree wave 4, which also happened. Then now you would expect a move to the downside in a wave 5, where if we look for the targets, you can see the most common target over here for wave 5 is the 1.236 to the 1.618, taken from the low to the current high that we have over here of this wave 4, which is between 26.3k and 26.1k. Other targets for wave 5 are the 1-to-1 and the 0.618 over here, which are just below at 26k. But all of these targets are just above this blue support area, which is my main area of support between 25.7 and 25.9k. So if price moves to the downside, I'd be looking for this area over here. Something I do like to note also is that this wave 3 over here did not reach a usually common target for wave 3, or a minimum target usually for a wave 3, but it is not the shortest wave, because if we take a trend-based fib from the high to the low of this blue wave 1 to the high of wave 2, then this wave 3 is longer in price as it passed the 1-to-1 than this blue wave 1. So it is a valid wave 3, as that is the minimum requirement. Now in this scenario you want to see an impulse to the downside, and if we quickly zoom in to this structure over here specifically, then you can count a 1, 2, 3, 4, 5 wave over here, potentially an ABC corrective structure, for then continuation to the downside. Of course this is invalidated the moment price reaches this high at 26,742. Another invalidation that you have to know is the invalidation for wave 4. If price is going to reach the 0.618 over here, which is sitting at 26.9k, a wave 4 is invalidated, and it means that you first want to see price moving down before coming back up. Then it's fine to reach this level, but if price would do this now before reaching the lows, then a wave 4 is invalidated. And also if we go that high and reach these levels, I'd personally be looking for the resistance area over here, sitting between 27.1 and 27.3k. Then finally, this is the more bullish / then bearish scenario where we are looking for an A, B, and this is then a wave C to the downside. So 1, 2, 3, 4, 5 in a wave C, reaching the most common target area for a wave C, which is between the 1 and the 1.236, very nicely respected as you can see. Now in this particular scenario, wave X usually has a minimum target being the 0.382, which, as you can clearly see, has not yet been touched. The 0.382 is sitting at 26.8k. We also then have the 05, the golden pocket, and the 786 in nice confluence over here, the 786 with that blue target box. So for a wave X, you actually want to see price moving to the upside first, before then looking for a move to the downside in a wave Y. So here we then have ABC looking for a move up and then another move to the downside. If we zoom out, then something that just pops in my mind is that if this is a finished ABC structure, you might immediately think about my previous video and the triangle over here, which is a triangle that KG came up with in Discord, where we then looking for an A, B, C, then you want to see a wave D and then an E. If this is indeed an A, B, C structure like a zigzag, this can be the end of wave D. But as you can see, this wave D is then incredibly short compared to the time of wave A, the time of wave B, even the time of this wave C. So that's not really something I am looking for, but at least I wanted to mention it in this stream or video in case you think about that particular scenario, the triangle scenario. So you want to see downside in this WXY, and then, yeah, well, the target for Y most likely, again, around this support area between 25.7k and 25.9k. If we look at the CVD divergences, we still have the bigger CVD divergences over here, lower high on price, higher high on the CVD. Target is this low over here at 24.8k, but more locally, well, it's been, first of all, very confusing with the price action this whole day, actually. We do have bearish CVD divergences here, but I do like to give preference to CVD divergences happening on the right side of a new high or a new low. So we have these bullish CVD divergences, haven't yet played out as this is the target. But then after these bullish CVD divergences, we also started to see bearish local CVD divergences over here. So it's a bit of a mix, to be honest. Now this bearish CVD divergence is invalidated if price reaches this high, increasing the probability for potential continuation, not a swing failure pattern. That's not what you want to see. What you want to see, price closing above and, you know, finding continuation to the upside. And the bullish CVD divergence is invalidated if price moves to the downside first before hitting this high. Now in the end, the probabilities of these different micro scenarios, well, probabilities for me are to the downside. The target box to the downside is definitely an area of interest. And out of the three micro scenarios, currently the one I'm favoring the most is this impulsive scenario where we then have a 1, 2, 3, 4, 5. The second highest probability scenario for me is the WXY, and then the final and least probable scenario for me is the 1112 for much lower prices. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.